Hello guys, welcome to Daily Market Review. Today's date is September 30th. Sorry, I have to do this recording twice as I had an issue apparently with OBS recording while doing it for the first time. So this is me doing it for the second time basically. So today is or was the last day of the quarterly, the third quarter, and the monthly close also was today. And on top of that, we had no news, no red folder news driver in the morning session, but in the afternoon session, we had Fed Chair Powell speech. So this is the whole New York session, including the pre-market. The main thing for today's session was the morning session was there just to build liquidity. Okay, what I mean by that is it basically doesn't engage. It forms a range, okay, from pre-market, basically 8 a.m. to 10 o'clock here. It formed this range, okay, and then until the Chair Powell speech, it stayed in that range and built liquidity. Now, in this case today, it ended up building both buy side and sell side liquidity, which means price accumulated basically in the morning session. So, in these kind of conditions, what you have to do is, so this is the most important thing, you have to avoid, okay, trading in the middle. So in this area here, okay, but you can trade this sell side delivery because it has equal lows. You can target that and here, and I'll be talking about it in a minute. But this area, you should be avoiding it. But what you need to do instead? So what you need to do instead is you identify the liquidity. In this case, it built the buy side equal highs. So this high here and this high here. This is engineered liquidity. And on the sell side of the curve, this low is the actual liquidity pool, and as this swing failed to engage with it, which means this low is engineered liquidity. Here it's relatively equal lows, relatively equal highs, and what you need to do is you need to wait for one side to get taken out and then fade that move, target the opposite side. But in the meantime, you wait for that raid, okay, the first raid. And also what you can do is, if you have enough confidence, okay, if the daily time frame is backing up, if the 1 minute time frame, the order flow is backing up the idea of one side delivery, okay, the first side. So if you can anticipate which side is going to be first, then you can obviously trade that as well. So in this case today, we could anticipate the equal lows getting purged first. And I'll be talking about it once I get into this price action. So that was tradable. So this drop here down below equal lows was tradable, as well as this reversal up into the equal highs. Okay, so let's dive into the order flow, and I'll be circling around the most important things from today's session. So during pre-market, we had a V-shaped reversal, and every BISI was basically supporting price to go higher. Once the New York opened, we ended up having a rather short or a rather small opening range gap, which was about 25 handles, more or less. And at 9:30, the price did not engage with sell side. It just delivered one-sidedly, buy side, and left here. We'll see it like this. And left the opening range gap basically inefficient. Now there is an actual liquidity void there because it was one-sidedly buy side. Now it lacks sell side delivery, and on top of that we had a short bias going into the New York session anyway. So this rally was completely fine for me, at least, because I had a bearish bias anyways. But in terms of narrative, so it formed a high, first presented fair value gap, it retested that, didn't even reach to the 50% of it, which indicates strength, so it popped one more time, popped twice, 3 times, 3 drives here, and with that purge, with that buy side purge here, it also formed. Let me clear the equal highs because we don't have it yet. It also formed a bearish SMT divergence. Now if you have a bearish bias, you can short this as well. That'll be a lower sell. Then it displaced. This first displacement came during the macro, which is after 950. Let's do this, but let's get rid of this. That was the first setup to go short. Then it kept pressing lower, formed a new SIBI during 10 o'clock, which is silver bullet. The reason I'm taking from the wick is because there's a volume balance there, same as this, and it dropped below all the way down to the opening range gap low. It balanced this gap, opening range gap, went up to this volume balance right there, formed the bearish order block. So this is the order block. Let me annotate that. And dropped, cleared this low, 930 lows, which is equal lows. That's a great partial, and then cleared the equal lows, which was the main target for me for the morning session. Now here, it dropped below the equal lows, which in a perfect world, when price engages with equal lows or equal highs, it has to basically break out or displace. Now in this case, it displaced, but immediately after that displacement was formed, it inverted it. Okay, now with that inversion, the first thing you should be thinking about is, okay, the market, Nasdaq, is not willing to engage with the sell side, but rather it's engineering liquidity here, basically building up sell side, because this is now relatively equal to the sell side, relatively equal lows. So after that inversion, we have a V shape. We have a V shape here, V shape rejection. This is a breaker block. Price comes down to the breaker block, which is also a discount PDRA in this case. So it comes down into the discount PDRA, which is a breaker block, and reprices higher. Equal highs also get swept, and then it accumulates long positions in this area, which was kind of too much back and forth for my liking. Like after the first leg, the second leg push, this wick from here to there is tradable. I wouldn't personally do it because of it was accumulating too long for my liking on a Monday before Chair Powell's speech. So it's basically one set out for life. Now we have equal lows here also. Let me put that as well. And then it took out the internal high. Okay, it comes down into the breaker block and also discount and goes for buy side. Here there is a displacement. Price didn't even come down to its CE, which indicates strength. Repriced higher, took the buy side. Pressed one more time. Now here at this point, even though you think that it's going to go for the buy side, you should not be trading any of these PDRAs. Why? Because of two reasons actually. One, because of the equal lows. Two, risk to reward is not there. Okay, from that fair value gap's low, I'm taking it from the low, considering that you, for whatever reason, longed it from the low. It's just 22 points. 22 handle reward is not worth the risk. So here it sweeps the equal highs, fails, and basically inverts the fair value gap and drops all the way into the open range gap. So let me clear this chart a little bit. With that drop, with this inversion here, changing the state of delivery, now the equal highs, it gets confirmed. Now on the bigger picture, right before Chair Powell's speech, which acts like just like FOMC basically, this is what we're looking at, guys. He was speaking at 1:55, and this was the market look. equal high formation, equal low formation, which means you should be waiting for one side to get engaged and fade that move. Or if you already have a confluence, or if you have a higher time frame narrative bias backing it up, you can also trade the first purge, which in this case it ended up being equal lows because the overall higher time frame look was bearish anyways. But let's take a look at it. So at 155, right before 155, this is the first indication. Nasdaq didn't clear the sell side, it left equals. Okay, that's the first indication of price is going to be willing to target equal lows first, then goes for the equal highs. That's the first thing. Then we have this range here. It comes all the way up into the premium range equilibrium and purges minor buy side. That's the second thing. And the third thing is, I'll zoom in a little bit here. This is 155 candle, which was when Chair Powell started speaking. So initially it formed this low and rated it, then it reached, or tried to reach, all the way up to the data high. It failed. Where did it fail though? Now I'm going to put the quadrants to this wick. It failed at the 75% of this wick, along with a bearish SMT divergence there. So everything you see in that price action is backing up the idea of equal lows getting taken out first, okay, and then depends on the price action after equal lows getting taken out, market will reprice to the buy side, which is equal highs here. Anything in between, it's irrelevant, okay? It is not relevant at all. You should disregard anything in between. Your main focus should be, like, when you look at this price like this, okay, like this exactly, what your eyes has to see is this low and this low, okay, this high and this high. Now once the 1 minute order flow backs up or favors one side or the other, in this case we have equal lows here, price comes up to the buy side or premium, purges the buy side, forms a bearish SMT right after that purge, it indicates equal lows is going to be attacked first, okay? Then you wait for a setup basically to go short. So here in this case, what I was primarily waiting for, I did not trade it, but I just tape read it. So we have this BC, I was waiting for this inversion, and look at the bodies here. Where is it rejecting? It's rejecting at the open and range gap high, telling you the story basically. And then it formed this SIBI. Okay, so inversions happened, confirmation with this candle displaced. Now the SIBI got closed all the way up because this candle, that candle lacks buy side, basically didn't manipulate, didn't wick or offered buy side. Okay, so it goes all the way up to offer buy side there, basically making market efficient, and then one-sidedly dropped. This is also silver bullet. I am gonna, because it was PM session of silver bullet after 2 o'clock, and right after that it one-sidedly repriced all the way down to the equal lows, which was, let's say you filled here 70 handles. Very, very good trade in my opinion. That and the inversion. You can also fill, if you have enough confluence, you can also fill the open range gap high rejection here, or the candle after, okay, anticipating this becoming an inversion parabolic gap. Okay, when I put red, it's usually inversion parabolic gap. It means inversion parabolic gap. So here, let's take a look at what happened afterwards. So equal lows, it displaced below equal lows, several displacements within that price action. This is the last displacement though. Got inverted very, very sharply, which indicates market formed a trap here. We have now a BPR. So this area is a BPR basically. Okay, so market came down went up to the emerging fair value gap, and the emerging fair value gap supported price for higher pricing. Now at this point, because there is a displacement, I could anticipate equal highs getting touched, but I would recommend, or I would personally wait for a second double confirmation, which means one more displacement. In this case, this one is the second displacement, and that is confirmation for my liking. Why? Because the sell side delivery here, it lacks an order block, which means once price changes the state of delivery, it's not gonna fade an order block, aka it's not gonna form a breaker block. So it requires additional confirmation, in my opinion, because it could have just accumulated here as well. Come on. Oh my god, come on. Accumulated as well in a large range and then popped. Okay, it could have done that too. That's why in this scenario I required a second confirmation, double confirmation, which is this fair value gap right here. Once that fair value gap formed or forms, now your eyes should see one thing only: relatively equal highs. Okay, because algorithmically market will reprice the opposite side of this equal low, or this sell side, which is buy side right there. Okay, in this case, when you see basically equal highs and equal lows on both sides, remember my turtle soup class. The first purge will be the manipulation, and you'll be looking to fade that purge, or you can trade it too if you want to, but ideally you wait for this purge and fade it. It doesn't even matter which side is going to get attacked first. Okay, sometimes you're not going to be able to anticipate that from off of the order flow. Today it was easy to anticipate it because of the Powell's speech, but it's not necessarily the case. So when you cannot anticipate which one's going to be first, you just wait for one side to get it doesn't even matter which side it's going to be. Okay, you basically set alert here. All right, just set alert here, set alert there, and leave your table. Just go on with your life. And once you get the alert, then get back to your monitor and look for setups. So here, displaced, retest of the fair value gap, or price touched the fair value gap, didn't even go for the CE indicating strength, popped, and this is basically a long accumulation at this point. The market is allowing smart money to accumulate long positions in this whole area. We also have this BPR here, balanced price range, comes down into that level, which is essentially an emergent fair value gap, comes down there. First displacement from the discount portion right here, and then another one right here. This is also a bullish order block, and then it pops, closes the opening range gap high, or open range gap in total, trades above it, and then the high of the open range gap supports the price within this BISI here. Okay, the bodies, look at the bodies. Let me zoom in a little bit. The bodies are telling you the story here. It stayed above the open range gap high, and within the last 10 minutes, this is very algorithmic, 350 traded down into the fair value gap last time, and the last 10 minutes, the 10-minute macro, a 20-minute macro rather, closing macro, delivered equal highs, and market closed somewhere around there. So yeah, that was it. For tomorrow, we'll see what happens. I'm not looking at it right now. Not too concerned about it for now. But if you have any questions about this kind of PA, equal highs, equal lows, and that kind of setup, feel free to ask me. In general chat, you can tag me, or if you want to keep it private, you can DM me as well. I usually try my best to catch up with DMs. I'm lagging a little bit, not gonna lie, because last week I was quite sick, but I'm catching up with them all. But yeah, hope you guys find this insightful. I'll talk to you tomorrow in the morning. Have a great rest of the day.